Good afternoon, everyone, and thank you for joining today's webinar, Unit Costing for Dummies. My name is Olivier Menon, and I am the Events and Communications Officer at Connecting Up. Today's webinar will be presented by Christian Shader, who is the NDIS specialist at Calxa, Australia. Just to remind you, this webinar is being recorded, and a link to the recording will be sent to you all in the next couple of days, and you'll be able to access it at any time on our website. If you have a question during the webinar, please type it in a question box on your webinar panel, and Christian will answer to them throughout the webinar. If you have any technical issue, please also type it in a question box, and I will try my best to help you. And we're all good to go, so I will hand over to you, Christian.
Well, good afternoon, everybody. As Oliver said, my name is Christian Shader, and I'm working with Calxa as the NDIS specialist. Again, welcome to the webinar. It's a webinar on unit costing for dummies. It's a brief overview of the importance of unit costing, especially in relation to the changing not-for-profit environment in Australia. So I'll start with a brief series of slides on the importance of unit costing and how it works, and then I'll go into an actual like a demonstration using Calxa and how to work out the costs and how they operate in terms of reports and things for your organisation. So to start, basically, unit costing is about understanding the cost of each individual service or activity that your organisation provides. It's generally a normal part of most industries these days, like manufacturing or retail or service industries. But with the changing, obviously, funding and the not-for-profit sector and moving towards the end-user funding now, it's meant some big changes for not-for-profits in Australia, and thus the reason why everyone's looking at how to do the unit costing now. It might seem a bit daunting, but if your present accounting and reporting systems are up to scratch, you've got a fairly good chance of moving forward with it. It's just basically a case of applying yourself to the new techniques and moving forward from there. So this seminar is going to take you through basically the basics and helping you to choose what costing method's right for yourself. So just as a quick agenda, I'll cover the why is unit costing important. I'll do some tips on setting up with MYOB, and basically then giving you an overview of how to use Calxa to calculate unit costs. And as Olivia said, if you have any questions, just type them in the box, and when I get a chance, I'll answer them as best I can. So pretty much we'll start with the importance of unit costing, and basically unit costing allows a business to see where they make a profit and at least know when they're not making a profit, and as such you can plan accordingly to move forward from there. Most organisations at the not-for-profit level at this stage really haven't been too worried about the unit costing, because with block funding there's always been money in the bank, or at least it's always been expected to be there. But basically most people are generally probably more interested in what they're actually spending the grant on, more than actually where it's going to come from. And with the situation now that most not-for-profits are effectively selling to their clients and have to rechange their business model, and thus the need for a system such as unit costing. And with many cases it's a fixed charge too that's being charged, and so knowing these costs is really vital. I do understand in the future that experts are sort of saying that some of the individuals involved will have a bit more power in terms of the costs, etc., and then it's going to be a bit more flexible. But at the moment, it's not so much market driven as driven by the government. So, but overall, basically, unit costing is all about promoting sustainability. So one of the most important things is when starting unit costing is understanding the pricing side of things, and where pricing is set by central agencies such as the NDIA or in New South Wales, I think it's the Ageing Disability Care ADIC. The key is knowing that you can provide a service lower than the price that you actually receive from your clients, and it's really important to understand this concept, because if you don't sort of get this in mind and you're not recovering those costs, it's going to be a fairly short and sharp downward spiral to becoming unsustainable. And so when it comes to costing on a one-on-one basis, it seems pretty easy. You've got a fairly easy surface to look at costs and return on that cost. But when it comes to groups and multiple organisations, can be quite difficult, especially when you have large numbers of people with different disabilities and different needs, and then obviously they've got carers, and there's other aspects come into it as well. These costs become really difficult to quantify, and strategies need to be adopted to work with these, and we'll sort of cover and touch on these later as we go. But there's one thing when talking about unit costs to keep in mind, and that's what we call the cost of collection. Accountants call it specifically the principle of materiality, which basically says that the cost of collecting information must be proportional to the value of that information. So effectively what they're saying and what we're saying is don't let unit costing sort of take over your organisation. It should be used as a tool and not as a thing that drives you forward. So I'd like to take a look just quickly at Australia's changing funding environment, and with the changes in the national costing and pricing framework, there's certain aspects now becoming pretty clear, and one is that management accounting is really important. And management accounting being the fact that it's the idea or the process of providing your management with timely, accurate and relevant information, so that, and it's designed to assist in sort of strategic and operational decisions by that by the board or by your management. So it's really important that you have this in mind as you're moving through into this environment. Costing is obviously, there's a cost to costing, as it says, and it takes time and money to organise your costing and especially setting it up. But once it's set up and once it's running properly and you've got your costing processes in place, there's an advantage that correctly costed activities in a competitive environment really allow you to make sustainable and good decisions for your organisations. The idea that costing is an ongoing process or an iterative process as well is really important, and it's you must understand also that it's not always possible to predict exact costs, but as such it's important to sort of frequently review your costs that you assemble and keeping good records of those cost outcomes. And basically the idea is that you sort of gain an understanding of how the costs are moving with a view to planning any mitigation strategies that might come in as you start moving, those costs start moving in different directions. One of the good things is to compare your actual costs against your actuals received and your activity levels against your budget expectations. And this is generally not that easy with things like spreadsheets, but with automated systems such as an accounting system, it makes it a lot easier. One hint when it comes to costing as well is to try and stay alert as you move forward for any seasonal changes or conditions, and try and forecast those in advance, and that becomes a skill which becomes part of the whole costing process. The idea of understanding your activity level really is important as well, because in any given period of time you've got to take into account things such as holding costs or times when your organisation's standing by without actually providing a service in terms of and being paid for that service by your clients. Those times, they can be fairly frequent sometimes, and unless you're actually preparing for those and planning and forecasting for those, it's really it's something that has to be considered, because lost time due to breakdowns or unforeseen circumstances can have a big impact on your cash flow down the line. And basically time is money, and if you're not accounting for that time and you risk losing revenue or wasting resources which could otherwise be reallocated. So it's important that is kept in mind. And with that all in mind, it comes down to your board, and board oversight now is a really important part of the process. And costing and pricing, they've got governance implications, and that when the boards receive information, if they receive correct information, they've got time and they've got the ability to actually change and make strategies that can mitigate any issues that might be coming up. And as we know, it's illegal to operate while insolvent. So good boards operate with good information, and it's really important to ensure that your data is relevant and accurate. One thing, the whole idea of costing obviously is to generate a profit, and it's not, profit has sort of been seen as a dirty word. It shouldn't be. Profit basically just means revenue exceeding your costs. And it's needed in the modern environment to remain sustainable. You've got to generate some working capital and future infrastructure investments. They have to be sort of accounted for. So obviously, it's an organisation must have some kind of profit strategy to move forward and account for this. And while it's not always possible for each activity to generate a profit on its own, but the overall operations of an organisation should meet that organisation's financial requirements. So you have to have a plan for accounting for things. Again, a lot of organisations, especially in the not-for-profit area and providing services to people, they offer special services sometimes which were under block funding were able to be done, but with end-user funding and lot of these days that these services are not really going to be funded under that sort of model, and in fact some of them could be quite underfunded. So you've got to remember that these services must be understood, accounted for, and strategies, as I've said, for achieving this cost recovery must be implemented as well. Doesn't mean that you can't do them, it just means that you have to have the foresight to actually plan them into your budgets and systems. Now, a lot of people say that that block funding is dead. Well, it hasn't really. It's been a bit exaggerated. There's still going to be situations where like cultural situations or geographically hard to access regions and lack of infrastructure in certain areas that block funding is still going to be provided to certain providers in certain areas. So just keeping that in mind and working with your systems, you still have to account for some funding, obviously. And it brings us to the practical steps of your costing itself. And the first thing you really have to do is choose a costing method. And basically, there's just two options that are available at the moment. One's the traditional spreadsheet-based approach, and that approach has carried people through many years of financial assistance. But the contemporary method, or the modern method, obviously is using technology in your accounting practices and using that technology to really boost up your effectiveness of your costing. If we look at spreadsheets in the past, they've had their place, as I said, traditionally in the financial region, but they can get clunky and difficult to use. There's the corruption associated with getting your formulas wrong. They're difficult to budget a lot of the times with multiple cost centres and entities, and especially as there's lots of mergers and things going on at the moment, these multiple cost centres are becoming more and more important to sort of get a handle on. And not the least the fact that most spreadsheets involve double entry, where you've got to take information from your accounting system, convert that into another field, and then that obviously has to be manipulated to form your reports and take that information out of. And it can be quite hard to maintain, especially if you've got multiple people dealing with that same spreadsheet. And obviously spreadsheets, as the more complex they get, the more advanced the person that's dealing with them has to become as well. And then when you see some of the formulas that are written out to work with some of these spreadsheets, you can understand why it's a thing that people don't generally like to get too involved in. However, with technology, the idea that technology takes care of all the grunt work when it comes to the laborious tasks of moving information around. It's a reduction in human error. But obviously, the technology assists with the accuracy of a product, and there's basically less chance of any data being corrupted or, in some cases, misused. And if you do decide that the technological approach is the easiest and most cost-effective way for you to organise to plan and estimate your costs, integrating Calxa, which is a company I work for, with MYOB or any other suitable accounting product, you'll find that it'll help really streamline your monthly cash flow estimates and reporting, and not the least, your systems will become more structured and reliable. And with the regular reporting, obviously it's going to allow your board to make much more strategic decisions, and really with automated processes it's only going to help free up your staff or for other tasks, or make it less stressful for some people at the end of the month. When it comes to spreadsheets, really there's not much else I can say on the matter, but yeah, it's just moving forward from there. So the next stage in process in preparing your costing system is to identify your activities, and you'll need to get sort of an idea of how to track and report on what services you provide and what level of detail is important. And as I said earlier on, the cost of collection, the level to which you actually want to dig down and collect that the data is really important as to how you see your costs being allocated over the period in which you want to actually plan and organise. But once you've got your activities all identified and you know exactly what your actual organisation is doing for your clients, you can then begin to start tracking your activities, and that's where, once you've got a unit, you have to define a unit, and that unit is the thing that you actually track within your system. Say, for example, a unit could just simply be an hour of someone's time, for example. As we move towards the demonstration on the Calxa product, you'll understand that the units generally don't fall sometimes within your accounting system. They're actually an exterior metric or an idea that has to be sort of merged with your accounting data, and that's where Calxa falls into it. And as I said before, understanding what your clients are paying for, it's really important to identify the actual service or product your clients actually are expecting and paying for. And sometimes you might be providing, or you have to look and see if you're providing any unfunded services. Some of the things that clients want and some of the things you can provide aren't necessarily on the same level. So in the past, people have sort of taken extra liberties to provide those extra services. Moving forward, those services are going to have to be accounted for, and that's a really important part when you consider the bigger picture of your organisation's cash flow and budgets. I mentioned before the complexity of basically costing, and on a one-on-one basis, costing is not too hard, but when you go to sort of bigger organisations with much more clientele and much and a lot more variation on activities, some things are quite difficult to work out. And just to take, for example, say a respite centre that might take a group of clients away every Saturday on an outing. These outings can include any number or combination of activities and costings as such. So they might look at lunch and a movie, or going to the zoo, or picnics, or even going out in the afternoons maybe to the circus or something like that. They all incur different costs, and under the funding systems, the clients are actually going to control what activities they prefer, so and where they want to go. So it becomes quite difficult to forecast and for respite organisations to actually know how many are going to attend each week. So it's really important to get an understanding of your forecasting and get a feel for your client, retaining those clients as well. And the more you can work to retain those clients, the easier it becomes to forecast and budget. The one thing the centres, the respite centre in this case, will know though is that they know that each client is going to pay a fixed price, and as such that sort of gives them an idea of where to start with your costings. The cost will vary obviously between different activities, and the number of carers and will vary as well with the complexity of each number of outings and the number of clients. And so it is a really hard mix to try and get right, and a lot of that information is contained within your accounting systems, and that has to be sort of morphed into putting it against the numbers of your clients and working out those units. So in this particular case, you could classify a unit as one outing per client, so and that's what the client's paying for. But you also note that, as I said before, the unit costs may vary from a week-to-week basis, and the best way to monitor is to look at the average costs over, say, a month or a number of events. And basically, the more you average these costs out and keep a record of it, the more practical and useful this information becomes. And you create basically a database of information, and from that you start gaining an overall sort of understanding of your costs in terms of the repetition of the activities and how many people come to them each week. Working out the precise cost of each outing too is also, especially for clients before the event, is pretty much impossible, because again, you don't really know until a client turns up if he's actually turning up, and that can make things a bit difficult. What we recommend is obviously working on estimates, and as I said, the more you keep records of these estimates and the more you keep records of your actuals, the more accurate database you build up. And if you monitor any trends in these costs on a month-by-month basis, they don't have to be exact, but you can see the trends and look for spikes as they appear in the unit costings. You run these unit costings against the costs against your budgets, and basically every month ensure that your costs are either matching your budgets or they're below budgets, making sure that things keep on track. And if they're not, because you can forecast ahead, you can actually see and make allowances to make sure that the things come back into budget. And again, it comes back to that importance of management accounting and letting your management know in advance where they're going, basically. In terms of MYOB, there's two areas in the MYOB setup that determines how easy or hard your unit costing is going to be. First, obviously, is the structure of your accounts, and the second is how your business units are going to be set up. In the next part, I'll just cover a few ideas of setting up both of these areas for basically ease of use and cost efficiency. And basically I'll highlight some areas and points which you need to be aware of before integrating your MYOB company files with Calxa. So in terms of creating a chart of accounts right at the start, this is a really important factor, and standard chart of accounts I think have been developed by QUT, and a lot of not-for-profits are using them at the moment. In some areas it's mandated that they're used, and in some areas the standard chart of accounts is sort of preferred by funding bodies. So if you're using the standard chart of accounts, there's no need to change. Go ahead and use them. They work perfectly well with Calxa. But if you do have the freedom to choose, we do recommend maybe talking to your bookkeepers or finance people and seeing what works for them in terms of how your business is set up to run, because they're invariably doing the data entry, and from that data entry, obviously the importance then becomes of the accuracy and of your reports that go to management. In the past, it's always been important organising your chart accounts and focusing on good management. But in terms of the options with Calxa, we offer a flexible ability to change, rearrange and restructure and regroup your charter accounts within the Calxa system. So it's not too dependent on how they're set up in your MYOB, but the cleaner and tidier they are in MYOB makes for clean and tidy reporting at the other end. And just as a quick tip, if you're setting up your MYOB, don't separate your activities and cost centres in the chart of accounts in MYOB. That's what they have. That's what jobs and categories are for. Having separate accounts for each activity in the chart of accounts makes data entry quite hard, laborious, and reporting can be a real pain. So keep your chart of accounts simple, but ensure that you've got enough details to make sure that decisions can be made without sort of overburdening the process. As I said before, MYOB separates the costs and revenues in two ways. They use things called categories and jobs. You'll be using a category if you've got if you need a balance sheet for each cost centre, and that cost centre's got distinct and separate sort of needs, and there's minimal transactions between different cost centres. There are some disadvantages to using the categories, and that the categories apply to the whole transaction and not individual lines within that transaction. So it can make things difficult to transfer something from one category to another. But in terms of the not-for-profit side of things, jobs are really have benefits for not-for-profits when they're organising their accounts. For a start, they're a bit easier and more flexible to move information around in. And with jobs, you get a hierarchy, so that you get like a header job, and then underneath that you header job with details, and then underneath that you get sort of detailed jobs beneath that header, and that makes for really good and strong and accurate reporting, and the ability to drill down to really defined areas within cost centres makes cost control really effective. Again, as I said before, Calxa also helps you consolidate reporting at the header level. So again, we offer that choice of being able to move things around within your chart of accounts to make it more, especially from a reporting side, more easy to understand for your boards or for people within the environment that aren't necessarily versed in accounting principles. So again, I was talking about jobs again. Jobs are easily applied from to individual transactional lines, so you can split one transaction over multiple jobs, and again, payrolls can be split over multiple jobs as well, and that's important if you've got someone working sort of on multiple cases and you need to allocate their wages over set cost centres. In terms of reporting from MYOB, it can be limited, but that's obviously where once it's integrated with Calxa, you basically can group, summarise and consolidate job information in many different ways. So next thing, I'll take you through some of the basics of Calxa. Not far off sort of doing a demonstration now, but just before you go into Calxa, we've got, when you set up Calxa, you have to create what they call a workspace, and a workspace is basically a place where you store all your organisational files and Calxa information. Presently, we've got three options. One is using a local database on your computer, the computer that you're running Calxa on. If you're working off a network basis, we can use an SQL Server database, or recently we've moved to what we call Calxa Online, which is cloud-based storage of all your Calxa files. And we're actually recommending now that people use Calxa Online for storing their files, because it allows you to access that information from any computer that has Calxa installed. So I'll talk about that option when I set it up, but for now I'm going to switch to our Calxa screen and do a bit of a demonstration. But if there's any questions before I go on to the demonstration, I'll just see if anyone's got any questions they need to ask, or is there anything that people are interested in before I move into the actual Calxa demonstration?
Yeah, we just have a quick question about Calxa. Can it be used with QuickBooks?
Yes, Calxa connects to QuickBooks. QuickBooks Online, not yet, but I think within the next month or so we're looking at an interface with that. So yes, definitely Calxa works with QuickBooks.
Thank you, Christian. And that was the only question. Yeah, the only question for the moment. So you can keep going with the demonstration.
Sure. Yep, probably when I start the demonstration, if people do have questions, yeah, just leave them to the end because they might be answered in the way the demonstration runs. Otherwise, yeah, feel free to you know, just send a message to Olivia and we'll work through them as we go. So I'll switch now to Calxa. When you download Calxa, I'll just explain quickly, is a downloadable product that links directly to your accounting software such as MYOB. So if you're running MYOB on a server, Calxa, you download it and basically you just connect it. I'll show you how to connect in a second. And then Calxa draws all your accounting information into Calxa and operates within the Calxa environment. We don't actually affect any of the information back in the MYOB, so you can't change anything in MYOB. Basically everything occurs within Calxa, so that's how it operates. So what you'll do is you'll download Calxa from the Calxa site. Connecting Up also can assist you with the donation of Calxa as well. And when you open Calxa for the first time, you'll open up with a screen that looks a little bit like this. Now, before you, as I said before, we're going to work with Calxa Online to store that information. Now, if you want to work and store it within the cloud, you actually just need to go to calxa.com and basically you open an account. So it's www.calxa.com/online/register, and what that'll do is that'll register effectively a workspace for you within Calxa Online, so that when you when you connect to Calxa, basically you'll first off will actually come with this screen here. You'll see that this will come up and it says open or create a Calxa workspace. So if you've already been in touch with Calxa, you just have to register for that workspace. You'll just go to where it says online here, click that button, and in this area here in the middle where it says default, you'll see there'll be a little line that'll say whatever your Calxa or whatever your organization's name is, and that's your workspace. So you'll just click login, and you'll log in with details that you supplied when you set up that workspace, and that'll take you straight into where I was before, the Calxa screen, which I'll go back to now, just for the sake of it. Okay. So it'll take you back to the screen as soon as you log into Calxa. So starting from here, the first thing you'll need to do is to connect Calxa to your accounting software. Quite easy to do. We manage all our connections through a button here in the top called Workspace Settings. So when you click on that, oops, excuse me, it'll set the start again. So organisation management, what I'm saying, reading the bomb. You go to organisation management. So you hit organisation management and it opens up this screen here. Now in this particular series, most of it, if it's a new account, you won't have any of these here. These are all the accounts that I've actually got connected to my Calxa. So what you'll do is you'll flick the little drop down box here. You can choose from any of the MYOB systems that you're operating, or QuickBooks or Xero if you're in the Xero workspace. And basically, once you click that, you follow. There's like it's a wizard that'll take you through connecting to Calxa, and all it'll do, it'll take you to, if you're on AccountRight Live, it'll take you to the AccountRight Live login. You'll just log in, and then that information will be transferred to Calxa, and it'll effectively create an account which will appear like this when you next sign into Calxa. Now, one thing about Calxa is that because it operates separately from your accounting system, but obviously connected to it, whenever you log into Calxa, you click the organisation that you're going to report on, and down the bottom here you'll see there's an update button. If you click that update button, every time you click on, it'll bring in the latest accounting data that's been entered into your system. So you're not going to get stuck with 1 or 2 weeks worth of data not being entered. Some people pull reports out of Calxa and then find that they haven't got set. They don't go far enough in advance, or they're missing data. Most of the time that comes from not updating your file when you start Calxa up. So when you start Calxa for the first time, it'll come across, you'll be given the option of importing any budgets that might be in your accounting software. At the time you connect to that software, it'll import all those budgets in automatically. Calxa can also work and import budgets from other sources that aren't within your accounting system if you've got them stored in spreadsheets or any CSV files. The import button here will allow you to access that information from wherever it's stored, and it'll bring it in the form of a spreadsheet, and then that will absorb into your Calxa system. One of the other strengths of Calxa is the thing we call the budget factory, which is we'll start that again. The budget factory is under our wizards button here, and if you hit the budget factory, what it does, it'll step you through a step-by-step process of developing budgets, and you can do bulk budgets using 10, 15 different organisational, 10 different category budgets if you need to, and they can all be processed at the same time. So it's basically a bulk budgeting tool that allows you to really speed up your budgeting process. I won't go into the building the budgets. It's not really what we're here for, but once the budget's in the system, they appear under what they call you'll see it under the edit budget screen. So in this particular case, you've got 3 buttons here: account budgets, metrics, actuals, and budgets. Now in this particular budget here, you'll see down the side there's gold little boxes. These are budgets that are already set up in my Calxa, and they should be basically at the organisational level, and then you've got these job levels down below. Now when you're preparing these budgets, these will all consolidate to become your operational or your organisational level budgets as you go forward. And these are the years that you've got budgets prepared for in the middle section here. You can lock these budgets quite easily by clicking the lock button, and that will mean that anyone going into that area can't actually move those budgets later on or change them. And one of the benefits of Calxa is you can assemble multiple budgets or budget versions. So if you've got an approved budget that you've set up, that might be the budget you brought in from your accounting software, you can copy that budget and reforecast or rename it and rechange all those budgets to reflect different conditions that you're going through. Maybe you want a disaster budget or maybe a reforecast budget, depending on different information that might come in. All of this can be set up within Calxa, so you've got a variety of budgets with which you can report on. So when you open up a budget, basically the open the budget screen comes up with a standard sort of format such as this. You'll have your accounts down the side that you're budgeting against. You have your monthly for the period that you budget. So this one is 2015, 2016, and a total. Within Calxa, you can add numbers quite easily and update those budgets as you need be. And you know, if you put in a total, it'll automatically split that total. If it's actually, I'll just change it to 0. So if I say just put in a total of say $15,000, Calxa automatically splits that up into the monthly figures. You can amend those and it'll automatically amend the total. So changing and updating budgets within Calxa is quite an easy situation. It's not too hard to do. But the budgeting side is something that's not really important to what we're doing at the moment. But in terms of Calxa, the idea is that you want to look at the use of KPIs or to ascertain unit costs. So how we look at that is, if you look at we go to our reporting stage, and I'll just open up the report screen here. So all Calxa's reports are basically come from this screen. Now you've got 3 different columns, which is the list of reports. These are the criteria for each report. So each report has a changing criteria. As you see, it'll change. And on this side here, you've got templates of these reports in slightly different formats or different column amounts. But again, as you can see, there's a lot of reports you can report on. In terms of using Calxa for unit costing, it's as simple as basically pulling a report, going to our KPI performance indicators, and here basically Calxa has a set of predetermined KPIs, the ratios, one of which we've put in as unit costing, and these can all be customized to suit, or you can add your own ones in if you need it. So I was to pull a bit of a spreadsheet, and I'll pull that report out with the unit costing selected under the key performance indicators. Calxa moves this report. Won't be a second. So Calxa produces a report like this, which is a standard sort of report, consolidated, showing your income, expenditure, and at the bottom it'll tag on like 2 of the KPIs added to that. One was cash reserves and the other was unit costs. So you can present this to your board and they can make decisions based on the unit costs or the reserves. Cash reserves obviously is an important part for not-for-profits these days as they move forward in the NDIS workspace. It's I think they're talking about a 3-month 90-day sort of cash reserve minimum is required. So that's how the KPIs are presented in terms of reports. But in order of working out your KPIs, that's quite different. They're quite easy to work out, and how you work them out is you go to what they call the key performance indicator edit workspace, which is up the top here. And that basically gives you a screen such as this. If you imagine it as 3 columns. On this side are the formulas. This is the working space where these formulas, you'll see how the formulas are put together, and these are the account groups that you apply the formulas to. Actually, what I will do is I'll go back to one page back. I'll go back to the edit screen first. Now, as I said before, these are the budgets that are in the system. You've actually got an area here where if you click metrics that allows you to put in, this is where the whole important part of Calxa comes in, to put in non-accounting information. So this is information that can be added after your accounting system is updated Calxa. So in this particular case here, if I open metrics for 2014, 2013, 2014, you'll see it opens up a screen here which gives me, for example, clients or vehicle one passengers. These are just it's free format, what you choose to call your metrics, and these are the totals, and these are month-by-month amounts for which these are just automatically calculated out. But as you assemble data, this is I was talking before about assembling data, you can create this sort of metric that automatically saves in the system, and the value of those metrics then can be applied against in formulas to work out your KPIs. You can also do budgets for it as well, doing the same sort of thing. I've created a couple of budgets here, which I open up. Now these budgets I set at the start of the year based on my experience from previous, and I can run those budgets against my actuals at any time by running a budget report or an actual versus budget report. And it's easy to create more and more of these metrics. All you have to do is click the new button. It automatically opens up a new metric row there. You can call it whatever you want. I could just call it new metrics. You just type in new metrics, and as I need to, I can type in on a monthly basis figures, which they will automatically be calculated at the top there. So it's very easy to put these in your system, and the strength of it is that you're able to actually report against these later on, and that's where I'll go to now. So I'll get rid of that screen there, and I'll go back to the KPI screen. So in terms of KPIs, if I look at my metric that I've developed here, which is unit cost for a client, so if you look in the middle screen, that's the equation that I've basically the unit cost works out. So what it does is it takes the metrics, which are over here on the right-hand side, the client metric. I could just insert that in as a typed formula. The total expenses, which is the accounts on this side here. Now what it does is it takes, it creates a heading, and then it takes all the information from that account. So in this particular one, if I click on total expense, you'll see on the right-hand side here, these are all the accounts that total expense comes from. So when you set these up, they're quite easy to set. You can set your own customizable ones. You could create an account group and just call it new. And once that goes in the system, you then can select accounts using these drop-down menus, which asset, liability, income, cost of sales. You can basically draw information into that account group from any of these just by selecting, like just with a such as that. And so anything then that is contained within those account groups will form into this new account, and you save that, and then basically you can then multiply that against any of your metrics as you see fit. So in this particular case, I'm not going to worry too much about it, but we'll go back to, if I wanted to do a new metric, I can, as I said before, customize, make my own one up. I could just click up on the yellow sun button there, and I'll just go new metric and enter that, and automatically you'll have a new metric over here on the right hand side, which it'll basically, you then can enter in your own formulas. I could enter in a formula. What do I, if now entering formulas of, so it's if, now I'm going to create a to stop it equating to 0, so I'll just put if, and I'll go, I can choose either an account group or a metric to formula this formula. So in this particular one, I will put metrics if vehicle one passengers less than or equal to 0, then, and I enter in another metric here, that could be my total expense one. I enter in total expense down the bottom here, and divide that by, again, my passengers. So once I've created that account and then that formula, I just save it, and then automatically Calxa will calculate out that formula. Now once that formula is saved in this particular area here, if we go back to the reporting stage, you'll see that one was my new metric, I think they call it, automatically updates this metric box down the bottom here. So you'll see new metrics here. So if I want to report on that new metric, I just click on that, and then I can attach that to any of these reports as I see fit. So it's quite an easy way of putting non-financial information into your system. So with that in mind, basically, Calxa then sort of it's allowed you to create like a way of quantifying your unit costs in terms of reporting it. Then it's a case of actually putting those unit costs into good, into reports and providing them to your board as they see fit. And some of the reports that we've got set up within Calxa are quite tailored towards a not-for-profit space or towards organisations moving within this area. As I said, we've got a bunch of different reports there. One that I probably will show first off is it's a spreadsheet profit and loss with 12 months of variation. So as I said before, I've added a couple of unit costs into that. So you'll get a report that'll come up, and you can just, these reports can be passed on as you see fit to your board, or all the information's there that you'll need. Profit and loss, that can be consolidated at different levels as well, or different, you can go to a sort of level 2 report or a level 4 report. You'll have these on the back of it, so the boards can make some interesting decisions from that. And while I'm actually talking about reports, what I will actually talk about next actually is a thing called bundles. Now, on the left-hand side there's bundles and reports. Calxa has a really good tool, and it's one of the features of our product. We call it bundles, and bundles is basically a way you can group your reports together, and those reports can be directed towards certain areas of your organisation that need certain types of information. So for example, I've got one that I've already set up here, the NDS costing bundle. So in the middle here you'll see there's 5 different reports and a cover page. Every month, all I would have to do if I wanted to produce these reports is literally come to this page, make sure the month is your reporting month, and just push display bundle. Now these reports will be presented as they come up here. Right, so in this particular report, this is my cover page, not a very professional one I'm afraid, but you have the ability to use, we've got a cover page generator that you can make, but these reports will be produced. So in this particular bunch of reports, I've got unit costs to budget over a period of time, so you'll see there's the actuals versus budget for unit costs, given that to information for boards to make. I've got some KPIs for sustainability, and these particular KPIs, I'm showing the bank balance over the months, cash reserves and days, again, like I said, that 3-month cash reserve is important, debtor days, participants in an activity or in a particular account, and showing your unit costs and your working and capital ratio. Going further down, there's an income trends. Again, like I said, these reports can be customised to suit your organisation's requirements. Cost centre comparison, another really good one between different cost centres within your organisation, not necessarily the organisation level, but just you can pick cost centres and then show them down the side where these cost centres are performing or not performing in terms of their costs and income at the time. So there's another one as well. Last one was the budget versus actual spreadsheet. So Calxa will show you just over a year's period your budgets versus actuals for that time. So as I said, these are groups that can be easily manufactured, these bundles. Obviously, the way to put them together sometimes is you might have a bundle for every month for your board meetings. You might have one every month for if you're reporting on to funding authorities, or you're reporting to someone like you're putting together a funding application. You can create these bundles to suit your requirements as you need it. To create a bundle, it's pretty easy. Basically, what you do is you sort out what report you want to. What report you're looking for, you set the criteria of this report. Now the reports can be, as I mentioned before, you pick your organisation that you're reporting on. You can report at a consolidated level, or you can report at a customised level. So in this particular one, if I look at my report selection, I can go to this edit button here, and within this environment I can pick my organisation at the top. I can pick individual cost centres which I want to report on. So if I click on one of those and save it, it'll allow me, when I push that report selection, it will only report on those particular ones I've worked on. So for example, in this one, I'll go again, I'll have a look. So if I click on this 130 assertiveness, which is one of my cost centres, save that. So normally your reports are at the, as I said before, the organisation selection. That'll report on the organisation. But if I go to my report selection, you'll see 130L is the report, so we'll only report on that particular department. So if you have a look at this spreadsheet profit and loss, it'll pull a profit and loss for only that department, which is 130L. Across those, you can see exactly where you're sitting with that departmental level. Again, showing reserves and cash unit costs for that particular department. So if that's what you would like to add to a bundle, you basically just click Add to Bundle. Won't be a second. You saw a report here, so I'd add to a bundle, and then it takes you to this screen. So then all I have to do is choose which bundle I want to add it to, and I can make new bundles as I see fit. Just by pushing new, it'll create a new one, and I'll just push OK. And what that will do, it will actually take that report and add it into, say for example, if I the costing bundle, we'll just add it into here. So every time I then come back to that costing bundle at the end of the month, that report will be in there, and I won't have to change any criteria for it. All I have to do is make sure that my reporting month's up to date, and that can be now from the bundle environment. As I said, you don't need to do too much with them. It'll produce the reports, as I say. Calxa then has the opportunity to export these either to an email by directly one of these files. It'll convert them, or I can go and convert it into a PDF file or store it under any of these particular file types. So Calxa is pretty flexible in the way that it handles the reports. You're not just stuck with lots of paper sort of sitting around. You can actually file them and send them off to people directly without too much of a hassle. So I'll just quickly run you through a couple of other quick reports before we're running out a bit of time. So in terms of relevance to the not-for-profit sector, Calxa sort of has the ability to really help you with making decisions at the boardroom level, and that's where the unit costing comes into it. You can sort of see whether you need to make changes or adaptations. And with Calxa, we have that ability to move things forward and reforecast budgets as well. So one particular budget that I'll look at here is, right, I'll do a consolidated budget here. So if I look at this particular budget, actually I won't do that one, I'll do a different one. I'll go there we go, unspent. So what this account actually does is it shows your actuals for the year, for the period that you've been working, and you come to February where I'm waiting on more actuals to come in. What it does, it will actually look at your total budget for the year, and it will actually reforecast your budget to make sure that all your figures fall within this budget. So it gives you something you can give to maybe a line manager or departments to make sure that their department, they can reforecast their budget so that they do know exactly what they need to do to maintain that focus and adapt to maybe a change in situation or a change in funding, or maybe like a blowout in your costings. These are where these particular tools come into a bit of into their own. We talk about cost centres and budgets. We look at a cost centre budget summary report here. Now, in this particular report, it gives you a snapshot of your cost centres and how they work. So these particular cost centres, they're consolidated at the moment, but I could easily write them down into individual cost centres. You'll see at the top is the consolidated figures, and then individually how these centres are working income against expenses, profit and loss for the month, and then for the year. So you can make decisions and see where your organisations are either falling down or being really proactive. And if you need any detail on those particular ones, you can then go to a cost centre comparison report, which shows you a lot more detail in terms of your cost centres. So it takes the cost centres across the top, and then it shows you the accounts and where those figures are coming from that you've seen in the actual consolidated reports. Again, we're going back down the forecasting side. Calxa's got really strong cash flow forecasting abilities. So you'll be looking at another cash flow forecast report. Probably the best thing about cash flow forecast is we do charts as well. So if I click a cash flow forecast chart and look, it gives you the ability to follow your bank balance, your expected bank balance over a period of time. And then obviously these are the accounts that are making up that particular bank balance. So you can sort of sit here in February 2006 and look forward to October and see where your bank balance is going to be. And again, this gives you the opportunity looking forward to make arrangements, make changes, and obviously change that for the better, especially if things are heading downwards. So basically that's the reports for Calxa. I mean, Calxa is really a reporting tool, but within that is that ability to show the unit costs within those reports and put those reports to good work with your board or the decision makers within the company. I'll shoot back to the actual presentation now and just go through a few more things before we finish. As you can see, sort of unit costing is not just a one size or one option fits all process. It depends on a number of factors, and those factors really come down to the initial setup of your accounting system and connecting the ability to connect directly to that system, and that's where Calxa comes into it. Your reporting is really important at the organisation, category and job level to achieve high levels of individual control of those accounts. As I said earlier on, understanding and tracking your activities and knowing what your units really are is an important factor as well. All of this can be contained within Calxa and reports pulled out to show what these actually are. And you really knowing exactly what your client's paying for is a really important factor to what we're talking about. Well, you don't always need to make a profit. I keep saying this, but you don't always need to make a profit on each activity, but through use of Calxa and MYOB, you can see quite clearly where you need to make adjustments to ensure that those losses are accounted for. So the basic process is setting up your accounting program, importing and setting your budgets, and using those bundles, like I was saying before, to get a good sort of easy monthly procedure in place so that those things are always standardised. You're not sort of running around looking for information at the last minute. You develop your metrics using those. Once you started quantifying your organisation's your activities that you're doing, you then start putting metrics in place and using that metrics capture screen to capture those metrics and then run those against the KPIs and the KPI editor to really gain a snapshot of your costing. And after that, you need to report on your costings, your actuals against budgets, and ensure things are on track. And as I said, develop a database of information as you go on and keep referring to that on an ongoing basis. That's a really important factor. So that's pretty much the end of it. I'll just run through a few more things. Calxa works, we have a program that we've been running through Connecting Up now for some years. Last year we reached target with Connecting Up of, we just had $1 million worth of donations of software to not-for-profits. Connecting Up have been really instrumental in assisting us with this through their website, and basically if you're really interested in a Calxa donation, go to the Connecting Up website and just look under Calxa. You'll see that there's a section on donations and the criteria for that. Yeah, feel free to to talk to them about it and come to us if you're not applicable. But yeah, we're really interested in helping people out and organising themselves within the not-for-profit environment. So Calxa offer a 30-day free trial as well. If you go to our website, www.calxa.com, there's a link at the bottom for a free 30-day trial of Calxa. Again, if you've got MYOB or Reckon or QuickBooks or Xero, it'll link to it, and then we're more than happy if you give us a call to help you through working with that. As part of our service, we also offer free monthly Getting Started webinars, which last week of the month I think they are, and that's again an online webinar that'll take you through the actual steps of using Calxa at the detailed level, and it's a really interesting one and helpful for people setting it up. Calxa has a money-back guarantee on a product, so if you're not satisfied, we're happy to sort of refund your situation, and you're able to cancel your subscriptions at any time. So. And the basis of this webinar was based on the Unit Costing for Dummies book, which was produced by, in conjunction with Calxa and MYOB. Mick Devine, our CEO, put it together. If you're interested in downloading a free ebook of this, just go to calxa.com/unit costing for dummies. Yeah, feel free to download that and have a look. And that basically, it's a working book for what I've been talking about today, so you'll see. Now, pretty much that's it for our webinar. If you've got any information that you need or want to contact me, Christian@calxa.com. If you've got any, you want to do the free trial, calxa.com/free trial. So feel free to download and have a go. And other than that, I'd like to thank Oliver and Connecting Up for their time, and hopefully everyone gets something out of this, and feel free to contact me if you want some more clarification on what we were talking about today. So, oh, actually, I've just got a question, a couple of quick questions I might just answer. Yes, someone's just asked, is an account selection drawn from the accounting software we're using? Yes, it is. We draw all our accounts into Calxa, and then we can sort of select those accounts if we need to, or we can delete, like we can select them or not select them for a report selection. So it's quite flexible in how that works. One thing I probably didn't mention is a thing called account trees, which within Calxa we have the ability to reorganize and reshuffle your chart of accounts to make things a little bit easier to understand. We can group whole bunches of accounts that you've got set up in your reporting into one single header level account. We've got some account trees that are as simple as 5 different headers with different, all the accounts underneath them. So it's very flexible. If you're interested in that, I've got there's the next Introduction to Calxa for not-for-profits is a webinar coming up. Check our website. We've got an event centre there, and I'll go into that in a lot of detail. So you'll see from that how easy it is to manipulate your accounts and choose different accounts. So hopefully that answers that question. Otherwise, Oliver, I'm pretty much done with what I've got to say, and that's me for Calxa. Thanks again, and thank you for attending.
Okay, do you have a few minutes can you stay back for a few minutes? Because we still have about 3 or 4 questions, so if you've got time to answer them.
Yeah, sure, go ahead.
Yeah, could you please tell a bit more about how much Calxa costs and how it works? Is it a monthly subscription fee? Is there a discount for not-for-profits?
Yep, okay, well Calxa works on a monthly subscription fee. Presently it's set at $150 a month, or $1,800 as a year. We do longer, like multi-year arrangements as well. I think we can go to 3 years or 5 years, and then that's best to probably email us on those. But in terms of general day-to-day, it's $150 a month subscription for the Premier and $1,800 a year. If you don't qualify for the donations, if you talk to Connecting Up directly, I think they offer a discounted system through their own processes as well. So I'm not sure exactly what the figures are on those, but I think it's a fairly good discount on the normal price of Calxa, so feel free to contact them on that. What else was there, Olivia? There was...
Yeah, we've got a question about metrics. If you put the total hours or units for the year, does it automatically divide them across month?
Yes, it does. Yeah, so it's automatically set by default to divide it into equal amounts. However, if you've got if you've got different amounts, you can manually change those, and it'll just recalculate at the total end to account for that. So that's how it works.
Okay, and a couple of questions about integrations. Firstly, does Calxa integrate with MYOB EXO?
Unfortunately not. No, EXO is not part of our integration situation, and as far as I know, there's not plans at this stage to integrate with it. From our experience with EXO, EXO's been probably more aimed at sort of the what would you call it, logistics, and it's not really involved. We don't really get a lot of people using EXO, so we haven't really looked into actually developing Calxa with that as yet. So yeah, no, I can't work with EXO, unfortunately.
And does Calxa integrate with other systems like client databases or case note systems to, for example, import metrics or KPIs?
We don't as such, but as the metric side of things is developing, we may have a facility to input metrics and through that, through the metrics field. But at this stage, Calxa works primarily just working with your accounting data as a direct connection. But we can, as I said, we do have that option to bring in spreadsheets through the import section, which can be, that's generally normally sort of at the accounting level. It's not at a metrics level, but I think as the metrics are going to develop, we may have some systems of working with metrics as we go. So at this stage, metrics are purely a manual update in our metrics field.
Okay, can you allow access to Calxa for an auditor? And if so, how do you do that?
Yep, Calxa has actually what I'll do is if the screen's still active, I'll go back to Calxa. You have a Manage Users screen at the top. So when you click that, what it does is it actually allows you to, Calxa has a 5 user limit on the standard Calxa license. We can add extra users to that. I think it's $10 a month to use, but in terms of allowing someone access to the system, you can set up an auditor or you can set up an audit field for an auditor to use. just by allowing them and setting them up under this field. So you can add an auditor, just add a name in there as long as it falls within the 5 user license. And then you can allow them access to set business units or set accounts. So, and once that's saved, you can give them the opportunity to, if they want to edit budgets or just view budgets, it's up to them, or edit financial settings or just view. So it's a fairly flexible way of allowing someone some input into the system as well, from an auditing perspective.
Okay, thank you, Christian. We've got one more question, and about integration again. Someone's using MYOB accounting right plus 2015. Does it still work with Calxa?
It still does work, yeah. So any of the previous versions of Account Right do work, and we work right up to the latest versions of it, so yes, it will.
Okay, that was the last question. So would you like to say anything before I wrap things up?
Not really. Look, I hope everyone enjoyed it. Please, as I said, feel free to give me an email or drop me a line or speak to Olivia if you've got any further questions. Go and have a look at the website, calxa.com, and you will see there's the free trial there. We do recommend you have a play with it. It's no obligations, and it's a full version of Calxa. So once it's set up, you'll see how easy it can be to use and how flexible and powerful it can be when it comes to your reporting for your boards. And in the end, it's really it's all about allowing people the right information to make the right decisions to move forward, and unit costing is part of that decision-making process, but it's also part of a bigger process as well. So feel free to use the product and have a look. Thank you very much.
Well, thank you, Christian, for presenting. Thank you, everyone, for joining us for this webinar. As mentioned earlier, we will send you a link to the webinar recording shortly, so please keep a lookout in your inbox. If any question comes to your mind later on, please feel free to email me at events@connectingup.org, and I'll forward them to Christian, or as he said, you can email him directly. And that is the end of this webinar. I wish you all a very good afternoon.